All right, let's get straight to our traders, Tom Hayes and Scott Bauer. Welcome, gentlemen.
Thanks for having us.
Hi.
Tom, you first. You just heard the Labor Secretary, and he says more people will go back to work when they're vaccinated. But how about when their state ends the extra unemployment benefits?
Well, I think that's a key factor, Lauren. As you saw, actually, the number of unemployed people ticked up a bit to 9.5 million. That compares with pre-pandemic at 5.7 million. The unemployment rate, as you said, ticked up to 5.9%. That compares with 3.5% pre-pandemic. That means that the Fed is probably going to, as Powell has been saying, stay in the market, and taper becomes a 2022 issue, not a 2021 issue. Market is up. Biggest gainers, leisure and hospitality, picked up 343,000, and education, 269,000 jobs. Lauren, I think there's an interesting trade here because the number one factor in housing demand is jobs, and we did pick up 850,000 of those this year. One of the things that we're looking at is the mortgage originators. They've been beaten up in recent months. And United Wholesale Mortgage Corp is trading at 9.3 times next year's earnings. Loan Depot is trading at 4.8 times next year's, and Rocket Mortgage 11.8 times next year. So, with the market up 90% off its pandemic lows, finding value is harder and harder to do, but with 72 million millennials around 30 years old starting housing formation and rates staying the 10-year below 150 basis points, we think there could be a great opportunity here over the next 12 to 24 months.
I want to go back to something you said earlier, and Scott, let me bring you in. 9.5 million unemployed, right? But there are 9.3 million jobs that are open. I know it's not that easy, but why can't those people without jobs fill the jobs that are open?
It's a different skill set. It's a different labor market right now, and many of the jobs that where people were laid off pre-pandemic have just not come back yet. But overall, Lauren, if you look at today's number here, today's number is not going to change the Fed's view whatsoever. They've been anticipating an acceleration in the labor market. And you know what? Maybe they're right. Maybe that is starting to happen now. However, just as the last 2 months slightly disappointed the market, where the numbers came in for both April and May below expectation, this 1 month of good data that we just got should not really make people, that jubilant. Hopefully, the pickup in hiring does signal that, the Fed, that people are going to and firms are going to have more success finding workers. That's just going to have to play out. This pace of hiring, though, it does seem sustainable over the next 6 to 12 months. And certainly we all, and the Fed certainly hopes that picks up.
But what about wages here, Tom? Up 3.6% year over year. Is that a lot? And I ask that because you look at the price of most goods, and they've gone up a lot more than that. Albeit you can make the argument prices are starting to come down for commodities and the like. But, as the Fed looks at the inflation situation, what do you think they do?
Well, Lauren, I think you hit the nail on the head before. 25 states still have extended unemployment benefits. The other 25 have extinguished them. So while the year-on-year wages are up, I think you're going to see a tremendous amount of labor supply come on market in September, which may subdue the wage growth that we've been seeing in the short term. So when you think about 9.5 million people that don't have jobs, once those extended unemployment benefits roll off in those 25 most populous states, by the way, a lot of people will flock back in, and that'll put pressure on wages as there's more supply of labor and employers don't have to pay up so much just to get anyone to show up.
And one more for you, Tom. The 10-year yield, it's down today, I think it's the longest losing streak of the year. What do you make of that?
Yeah, I think it points to what we've been talking about. With 9.5 million people still unemployed, the Fed is going to be in no rush to do aggressive tapering or aggressive rate raises. Tapering becomes a 2022 issue. Rate raises become a 2023 issue. And we've got to get that number down. Pre-pandemic, there were only 5.7 million people unemployed. And until that happens, it will be pedal on the metal. And that's kind of why we're looking at this opportunity in the mortgage origination originators because they have been beaten down so much, but that demand is going to come back in spades. And to your point, with lumber prices collapsing, supply is going to come back online, volume is going to come back online, and we think that's somewhere to look over the next 12 to 24 months.
Tom Hayes, thank you very much. And like your thoughts on the housing
Thanks, Lauren.
market. Well, regardless